Good evening and welcome to the Link edition for this week. And we continue to promise you to bring you information that you can use, including opportunities. Tonight we're discussing, I think, information. I don't think the opportunity is here. We're discussing the tax. Taxes were passed by Parliament a couple of weeks ago. And starting July 1st, some people are going to experience taxes. On the Link tonight, we're going to talk about taxes that affect businesses in the coming financial year. And I have the right person in the studio to help us with that subject. My guest tonight is Mr. Stuart Molabi, who is the tax manager at Deloitte, who is going to take us through the taxes that are going to affect you if you're in business. Stuart, welcome.
Thank you very much. Thank you very much for the opportunity.
All right, I'll just put it straight out. Take us through, I know there are two major tax heads which business people should look out for in the next financial year. Please take us through them, and maybe we'll start with the VAT component, value-added tax.
All right. So thank you very much, Simon, for that introduction. Maybe before we dig deeper into the technicalities of what the Parliament has approved and the next steps, from a legal perspective, these amendments which Parliament has approved can only be passed into law if the President has signed. Okay. So the Constitution provides for a 30-day period from the time when the Parliament has passed the amendments, and in that 30-day period, the President has to assent. So to assent is meaning for him to sign. So he has the ability to send them back to Parliament for further discussion. Okay. Again, from the legal perspective, the Constitution says that if the bills are sent back 2 times, then in that case, whatever Parliament has approved on the second reading becomes the law. Yeah. So that's just the legal framework of where we are now. So as of now, the President hasn't yet signed. We hope that he signs them so that it gives some clarity for the taxpayers come 1st July, because we've seen some period whereby they're signed late, they're signed, say, in September, October. We saw that during the COVID times, but that warranted a special consideration, so that is something else. So if we now go to the technical aspects of what the Parliament has approved, pending signature, I'll begin with the VAT. So I think a few weeks back, one very popular news house published a heading saying that pay as you earn has been increased by, as now 48%.
Yeah,
I think,
I saw that.
Yeah, I think that was a very common thing. Yeah. So I just want to kind of provide some clarity as to why that was assumed to be like that. So part of the amendments, it has been proposed that if you are a business, a company, and you provide your employer with free goods or services, you ought to charge VAT for those free goods or services.
Like what? Tea and sugar?
So I'll give an example. Give an example. Say you, Samuel, you run a brewery. You make beer, you make whiskey, you make liquor. And say your employer, your very good employee, is having a wedding. Okay. And instead of you giving a monetary assistance, you say that I'm going to give, say, 10 crates of beer, 10 crates of liquor, or what have you. So you, as if this particular proposal is passed into law, you are going to be required to account for VAT on those goods and services, on those goods you've given to your employee. And the logic is very basic. Yeah. Okay, it's also basic, but VAT is an input-output tax mechanism. Okay. For lack of a better word, for every input, there should be output. For you to enjoy the benefit of that input, you ought to also charge tax at some level in that chain. So the ultimate burden of VAT lies on the final consumer. So in that transaction, the employee who's having the wedding is the one who will have to bear the burden of that VAT. So how VAT works? Input, output. The difference of that is what forms the basis for charging VAT. So for most of the business people out there, know that when you're filing your VAT return, the difference for which VAT is applicable, you get your output minus your input.
So that means there's no more free things from our employees.
Surprisingly, this particular amendment has, I would say, has some history behind it. So there was a previous court decision, I think that was Celtel, if I'm mistaken, Celtel versus URA, whereby the courts decided that the free airtime that Celtel was providing to its employees was actually vatable. Okay. Even currently, the wording of the VAT Act provides for something called on consumption. So if you are a business and you use what you're producing for your own consumption, so in this case, on consumption means private use. So private use means if you supply something for no consideration, when I talk about that's giving a free supply to someone, that's no consideration. So all those basically mean that you've actually made a taxable supply. So this particular provision is just clarifying what's already in the law. Yes.
Let's move on because of time.
Yes. So again, when we go to the VAT, again, there is something about auctioning. So again, the current, I think this is meant to also to provide some clarity on what the current VAT Act says. So in the current VAT Act, it said that if you are doing an auction, the person who is doing the auction is the one who's supposed to account for the VAT. So that was perceived of as, I think, being unfair by the business community. And right now, in the current amendment, it has been proposed that the person who receives the proceeds of the auction is the one who's supposed to account for the VAT.
If I'm auctioning, my card is auctioned. Okay, let's say the bank. If a bank is auctioning a building, and the bank gets the proceeds of they have to pay VAT on what they've received.
So I think, fortunately or unfortunately, you have brought an example which is very, I think, which is very ambiguous because just a few weeks back I had a discussion with a colleague of mine on that same aspect, because you see how banks work. If someone, say, defaults on a loan, they might auction the property and end up receiving higher than the receiving amounts higher than the value of what they are proposing. So in that case, they may have to give the balance to the
owner.
The owner. So in that case, now who accounts for the VAT? Okay, so there is some ambiguity there.
So if it is the bank, and the bank sells a little bit more than what I owe them, and they take their part and give me the other part, I'm the one who's paying tax, not the bank.
So there is some ambiguity there. Are you going to share the VAT bill or not? But in its finest, simplest form, I'll give, say, if tomorrow, Samuel, you say you have your business and you have old vehicles you want to dispose of, So when you hire an auction house to dispose of your vehicles, you are the ultimate recipient of the proceeds. So it's you to account for the VAT.
Like the UN agencies.
Exactly, So the auction house is just providing to you a service, and they'll also give you an invoice for that service. So that's what has been proposed in the current amendments. So I would say those, I think, are the two main...
for VAT.
For
Let's
VAT.
move to income tax.
So income tax, I think I'll begin with I think some good news for most of our viewers. I think there had been that proposal of the 5% capital gains on non-business assets that has been scrapped off by Parliament. I think they had quite a number of discussions on that, and they deemed not fit enough for the business sector. So that has not been, but has made the final cut of the Parliament. There has been an amendment regarding private equity or venture capital. So I'll just talk briefly about what private equity is and venture capital. So private equity is basically capital injection into, I would say, businesses that maybe are not performing well. So we have some partners who actually either through debt or equity, inject funds into businesses.
Basically, they save the business by injecting money.
And they get proceeds maybe through dividends or interest, depending on what kind of model they have put in the business. Then for venture capital mainly comes at the start. So if, say, for example, and this is very common in IT companies, those who are setting up, say, websites, or setting up new software, they normally prepare proposals for venture capital funders.
Yeah.
So that normally happens at the start.
Yeah.
So what the current amendment is talking about is that income derived by either venture capital or private equity players is from their investments is now exempt. So even with the current Income Tax Act, the way it is right now, its wording, it provides for exemption from capital gains only for private equity players when they dispose of a particular percentage of
their shareholding.
And subject to them reinvesting it in a given time period. But now this particular proposal seeks to expand the exemption to cover all income. Maybe the only ambiguity which surrounds this particular exemption is that the parliamentarians tried to target by saying that private capital players and venture capital players who are under the Capital Markets Authority regulation. However, in practice, the Capital Markets doesn't regulate these people. So we await to see what clarity we get, because obviously all these amendments are subject to interpretation by the URA, or depending on some of them may be subject to case law. So we await. So that is one of the major ones for income tax. The other one,
we have a minute and a half.
We are looking at things to do with things to do with electrical vehicles, exemptions.
Electrical vehicles, we can't talk about it because that target is a certain factor, not the usual business. So let's move on. 1 minute, tax procedure.
So Tax Procedures Code Act, one major amendment. This didn't form part of the bills, but it's now proposed. So it has been reintroduced at the time of passing the amendments. If someone has a tax debt, so the tax debt normally constitutes principal, interest, and penalties. So if you are a business owner and you have a tax debt by URA, if you are to happen to pay the principal by 31st December 24, any interest and penalty will be waived automatically.
So by December this year? If you pay the principal? The interest, everything else waived?
Will be waived. So we had a similar argument last year, but because the time it was effected, so the time when the URA was able to come up with a system to track the interest and the penalties, I think by around November, so the time had really expired. So the Tax Agents Association has been very key in fighting for this. And we're happy that there is some leeway for taxpayers. So the principal and interest will be waived if the principal is paid by 31st December. Thank
you so much, Stuart, for taking us through the major
ones,
changes in the tax amendments. We are waiting for the president to allow. We think he will allow, but if there are changes, we'll come back here and explain. Viewers, today we're discussing the issues that are going to affect you in terms of the proposed taxes which have been passed by Parliament come July 1st, subject to the president signing. We hope we added value to you. That was the link. Thank you for joining us tonight.
Thank you.